Hello, I'm Angeline Ong, and this is your look ahead to the week starting the 20th of February 2023. Now, plenty of trading opportunities in the form of consumer, manufacturing and services data from Germany and the eurozone as a whole. We have the ZEW out on Tuesday, followed by the IFO Wednesday, and then fourth quarter US GDP and the GfK consumer confidence data on Friday. Now, currencies, especially the euro, could be a big mover along with the dollar, given the risk aversion we're seeing in play on Friday due to concerns of stickier inflation and therefore giving the Fed more ammunition to keep pushing rates higher. Now, we also have the Fed minutes in the week ahead. Here to discuss a key trade hanging off that is IG's Axel Rudolph.
Yes, Angeline, I find that on Wednesday we've got the US Fed minutes, and that's really important because basically it will give us a good indication of where the Fed is heading with regards to its next rate hike and whether that will be 25 basis points or perhaps 50 basis points, especially since several Fed committee members have come out this week indicating that they would actually support a 50 basis point rate hike on the base of those stronger than expected US producer price inflation data and also unemployment data previously. And with regards to the US Fed minutes on Wednesday, I'd like to look at the NASDAQ 100. And here on the daily financial bet, what we can see is that we have now fallen through the 2023 uptrend line and also formed a bearish engulfing pattern on the daily candlestick chart, both of which is actually short-term negative and may indicate that we are forming a top with regards to the NASDAQ 100, because after all, we've just basically fell short again this week, just like last week, of the highs which were made between September and early February. So September last year, 12,902 and 12,896 just a few weeks ago this year. So basically what this means from a technical perspective is that if we were to fall through last week's low at 12,203, we would be in a consolidation phase and have formed a minor top, taking us back down again, probably towards the mid-November high, 12,084, and perhaps even to the 200-day simple moving average at 11,894. So toppish scenario going on at the moment with regards to the NASDAQ 100, and it'll be interesting to see whether we will see follow through on that next week with the US Fed minutes.
Now, earnings also in focus in the week ahead, but the deluge is calming down a little. From the US, we have tech and consumer there making a theme for us, with quarterly numbers out from Home Depot, Walmart, eBay and NVIDIA as well. Let me show you NVIDIA's chart here. A very interesting space, given that the chip industry is looking at a potential global glut. Don't forget to check out my show in the coming week on the global chip glut and how to trade this theme. We also have Rolls-Royce in the picture. Now, this company is interesting because its shares sank in January after its new chief executive warned staff the company was facing its last chance to change and improve its performance. This in an FT report. Rolls-Royce, of course, makes engines and systems that power the Airbus A350 and the Boeing 787, as well as ships, submarines, and in power generation too. BAE Systems and IAG are out with numbers in the back half of the week. Now, the bank's theme this week that is in play continues in the coming week, with HSBC reporting Tuesday and Lloyds Banking Group on Wednesday. Axel's also been taking a closer look at that.
On Wednesday, we've got Lloyds Banking Group full year results out, and they could be quite important for the share price, especially since it's come off its around 17% high year to date just this week. And if we look at the daily chart, what we can see is this reversal, but it's even clearer on the weekly chart that I've got on here, because we can see that since October of last year, the Lloyds Banking Group share price has risen in this clearly defined uptrend channel. But as I just mentioned, this week it has come off quite sharply. I mean, it's still up about 12% year to date. But from a technical perspective, what is interesting here is that we have fallen short of the key resistance area around the 56 pence mark, which is made up of the 2017, 2018, and also 2019 highs. So these could be back in focus if the full year results were to surprise to the upside, because after all, Lloyds has benefited from the Bank of England's rate hikes over the last year or so. And that is, though, a double-edged sword, because basically, as rates tend to increase even further, the risk of defaults happening and then negatively affecting the bank's balance sheet also increases. And as we know, the UK is in a situation where its economy is looking to be the weakest out of the G7 economies. And therefore, since Lloyds is very much focused on the domestic market, we may see a bigger impact of that on the Lloyds share price going forward and on the company's results. So going back to the technicals, what we've seen here so far is we're holding at the midpoint of this uptrend channel. But if we go on to a daily chart, what is likely to be seen here is that we can see a further slide take us down to the October to February uptrend line, which comes in around the 50 pence mark. And below there, we also have the high seen back in September of last year, which is just below the 50 pence mark. So short term, it looks as if we are heading back down again towards this uptrend line and also the orange line here, which is the 55-day simple moving average around the 49 pence area, and perhaps even towards the mid-January low at 48 pence and 50. But if we were to get better than expected results out, and if we were to rise above the high seen at the beginning of February around 54 pence and 33, then we could head back up again towards those highs I just mentioned on the weekly chart between 2017 and 2019, made around the 60 pence mark.
And that's a wrap of your week ahead. I'm Angeline Ong, and this is your IGTV.